So now that you can see how the single family home retirement strategy works, with your real estate investment planning software, you just come in here, you click on single family home retirement strategy, you would put in your strategy, whatever the case may be. We already have one built out here, so we're going to show you this, but you could click on new strategy for yourself. We're going to click on this, and this is going to show us as far as 6 properties that are already in this person's portfolio. So what we did first of all is we said, okay, is the average appreciation going to be in the next 20 years? And if you go over and click on these little question marks, it'll give you some projections to back up this information that we're sharing with you here. What's the operating expenses going to be over the next 20 years? Vacancy factors, rent increases, and the term in this case is going to be 20 years. You can put anything you want in there. If you want to put 15, 30 years, depending on your age, that's up to you. Okay, then the next thing you do is you come down here. Now all these properties are in your portfolio. So all you do is you come down here, you click on these, and what happens, it automatically populates in each one of these. So to simplify this, on each one of these properties, we'll take the first one here on Myers. This is where it is today. This is the rent coming in. This is the vacancy factor, property taxes, etc. So the amount of expenses on this property today is $492 without payment, okay, because we're looking at end of term. We're not looking at as far as in terms of day-to-day cash flow now. This is what is your portfolio going to look like in 20 years when all these properties are paid off. So we start with our base. This is where we are today, but based on these increases, these prices are going to increase. The rent's going to increase, but also the property taxes are going to increase. The insurance is going to increase. So we've allocated as far as for that. So at the end of 20 years on this property, where right now it's bringing in $12,000 a year and $1,000 a month, okay, before any payment or anything. At retirement, you're going to have $3,100 coming in. You're going to have $728 in expenses, so it's going to bring in $29,000 a year or $2,400 a month. Okay, now going on down, following the same property, we bought this property for $180,000. It's appreciated $470. So now this property is worth $650,000 20 years later. So what we've done is we've taken each property, and you can see this is another one. We've done the same thing and just duplicated it 6 times. So at the end of 20 years, what you would have is, if you look across the top here, your total income would be $17,000 a month. Keep in mind now, all these properties have been paid off on the strategy that I just explained. If we come on down here, it will show these are the expenses. So your expenses on those 6 houses are $4,300 a month. Okay, if you take that away, you've got an annual income of $151,000 or a monthly income net of $12,639. So that gives you your $10,000 a month and then some as far as per month. The properties, we bought all 6 of these properties. You can see we bought one for $180, $175, so on and so forth, $895, but they appreciated $2.3 million based on a 7% appreciation rate over the 20 years. That gives you net $3.2 million plus in 6 properties that are free and clear, and you have $151,000 a year coming in as far as in terms of cash flow. This completes the single family home retirement strategy.